Okay, so this is euro dollar. If we choose X point from January 30th, okay, this X point, we can see that there is kind of you know, a bad pattern, right? Yeah, not yet touched the 618. Okay, a bad pattern tells you that you should buy from 1.2356, and boom, it really goes. Okay, you can see how powerful the harmonic pattern is. All right, the thing is you have to take the profit of your buy and enter your short based on the structure. Okay, so if you short for 1.2428, you could earn about, yeah, to 1.2348, that is 100 pips easily. Okay, right now the euro is pulling back again, so my key eye level will be this place here. Okay, so it's from 1.2354 to 1.2367, at least for today. Okay, so if the euro can stay below the structure, I will keep my short position on. Okay, and I think it forms another down approach. Right, so in the higher time frame, let's go check in the 4-hour chart what we have in the euro dollar. First of all, a bullish channel has been violated. Okay, so you can see this bullish channel has been broken down, retested, cannot break. It's the second time cannot break high, right? Just before the non-farm payroll day, so it's a perfect time to short from this bad pattern. Okay, so anyone short has already win about 150 pips. Okay, right now what we should look at is the trend tends to go change from the uptrend to a sideways trend. Okay, the range high is 1.25, the range low is about 1.2330. Okay, so we don't know whether the euro will go up again and retest the high again, or it will just, you know, sideways here and then finally it breaks down. Okay, personally I prefer the second one. I think that we have higher possibilities. Okay, because what we have is, although the 1.2330 is a support, all right, because the price had already tested once, tested twice, tested 3 times, so therefore it might form a neckline of this top formation. Okay, so that if the neckline really are complete, okay, then in a forward chart the euro may have this kind of a double top. So once a double top is complete, okay, it will actually indicate the euro will turns the trend into bearish trend. So our strategy is sell the high, okay, sell the pullback. Okay, so let's go to into the 30-minute charts to find out more. Okay, obviously guys, can you see that? Can you see this? Look at here. How many times euro have support from this level? Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. All right, and then reverse very nicely to 1.2430, and then just now, just, you know, 1 hour ago or 1.5 hour ago, okay, the euro has break down the 1.2350, and now it's pulling back. So we have to watch the closing price of this 30 minutes. If this 30 minutes candle stays like this, okay, cannot go above this yellow structure, you should short. Clear? Are we clear? Yeah, and at least you can expect a fall to retest 1.2330 at least. Okay, may not go below the low, but it have a second. The sellers may have a start to make another down. All right. So watch for the price, closing price of this, and we use this structure to sell the pullback. All right. 1.2360 important. Yes, it's important in this couple hours. Okay, because previously you can see here in the afternoon session, in the late Asia session, right, the euro actually bounced from this level, and it makes a looks like it's going to reverse, right, because trend line has broken. However, it really doesn't work. Okay, the sellers are more powerful, and you see this one totally, break down the structure. So pulling back, you should sell. Okay. All right. So this is for the euro. In a day, let's go for the daily chart. All right. Daily chart looks tricky because although the euro comes down from 1.2530 to 1.2350 is about 200 pips. Okay, but this is still not a very good top. Okay, the bearish side is not so significant compared with the bullish, wave. So I rather treat this as temporarily stop rising, and goes into sideways. So to be confirmed, the euro will start to turn bearish. All right, it has to break the trend line here. It has to break this trend line. Otherwise, it will just stay there and sideways and touch the trend line and goes up. Okay? So my suggestion is, of course, we can buy the low or sell the high. Okay, but you should really focus on where you should take some profit and make stop loss even. Okay, that's very important. All right. In daily chart, looks like the euro is going to turn around. All right, just like something like here. What happened here? Okay, former top and then goes down. Okay, retest the neckline, goes down again. So we don't have it in the daily chart yet, but people can feel that. Okay, if the euro goes down to 1.2220 first, it may bounce back to 1.23830 to bounce to this place, and then maybe the euro will force down below the trend line. Okay. And don't forget, in daily chart, the euro has rallied for the whole 2017. Okay, in 2017 January 4th, starting from 2017 January 4th, the euro rised for a whole year until 2018 February 5th. So such a very, very big trend. Okay, we have to be careful that the price may easily push back at least 0.38.2%. Okay, so it's 38.2%, which is tells you that the euro may likely to go to 1.17. Okay, but before it reached to this level, it has to take over this place 1.2290 and also take this place 1.2090. Right? Oops, sorry, my microphone is down. Okay, guys, can you see my chart clear? Can you? If you can see my chart clear. All right, good. Okay. All right, take some look at the 5-minute charts. Wow, you see here, it really works, right? Yeah. Simple structure goes down, pull back, and short. Okay, and when the price hits 1-to-1 risk-reward ratio, for example, in this trade, okay, if you short from here, your stop loss will be above 1.2370. So it's about about 10 or 15 pips. Okay, so from 15 pips, you add from your entry. That's your first target. Okay, TP1 about to equal. TP2 will be more. Right. Okay, good. Let's take a look at the gold. Okay, the gold actually gives free money today. If you have ever joined my previous webinar before, okay, let me show you this very interesting thing. Okay, very interesting thing. Oops. should compare, add symbol, okay, euro dollar. Okay, good. So remember, normally we have a positive correlation between gold and the euro. Why? Do you know why? Anybody knows why? So positive correlation means if gold goes up, the euro will goes up. If gold goes down, the euro will goes down as well. Right? Do you agree? That is a very, very common scenario that we found every day. No voice? Are you sure? Can you hear me? Yeah, I think some people already answered my question, which proves that, yeah, my microphone is working well. Okay, because euro dollar, okay, contributes the most weightage in the dollar index. So dollar goes up, euro goes down. That's a fact, okay? There's no reason for that. At least as long as the euro is, stays very, very bullish, but the gold stays not so bullish. And when the euro goes up, DXY goes down, dollar goes down. And gold is calculated by dollar, 1,300 per ounce, right? So if the DXY, the value is going down, the gold go up, the price will goes up. That's a very, very typical scenario we see a lot of times, okay? But there are some times that the euro and the gold doesn't match together. They are not matching together, same thing, okay? If you look at here, we check the non-farm payroll day, guys. You see this 1 hour chart? The top one is the gold. The gold dropped below from 1345 to 1335, 100 pips. The euro dropped to 1.2445 from 1.2491, 50 pips. Okay. How about the second one? Second one, okay, both are going down, which is good. How about oops. What happened? What happened to my screen? Okay, let me just refresh it. Okay. Guys, let's see the difference, okay? Okay, both going down. Then at here, is there something strange or is there something that abnormal? Reply me 1 if you think there's nothing wrong with it. Reply me 2 if you feel that you cannot understand. Sound start to lag. Is it? You mean there's a little bit laggy? Okay. Let me figure it out, right? Let me figure it out. Okay. Better? Comes and go. Okay, good. All right, see here. The euro starts to bounce from 1.2411, right? Euro bounce again, then the gold lagging by 1 candle. Can you see that? If you can see, please reply me by 1. Do you see the difference? The euro rallies pretty much, right? From 1.2420 to 1.2480, almost the same place that the gold and the euro both break after non-farm payroll, right? We just added a horizontal line here. What are this telling you? It's telling you that the gold is lagging, right? Which one is lagging? Which one is leading? Can you see from the chart? The euro or the gold is, which one is leading? Yes, the euro is leading, right? Euro pulls back very quickly at the 1, 2, 3, the third candle, but the gold only rise a little bit, right? Then let's continue, watch, okay? The euro rejected from this place, okay? The gold also goes down, okay? Then the euro start to fall, sideways for both, okay? Euro gaps down, up, go up, this one, same, okay? But they are playing a different range. And then suddenly you find that, oops, something shows you a very, very nice trade after you see this candle. What do you have? You just need to simply watch the behavior, right? The price pulls back to the non-farm payroll structure here. This place is the same level, right? Same place. They are representing the same structure for both the gold and euro. Okay, euro pulls back, rejected, and then euro after this candle. What can you see? Does euro make a lower low? Did the euro make a lower low or not? Breaks a new low. Did it? Yes, it did, right? How about the gold? The gold didn't make a lower low, and the gold yet not touch the rejection place. So from the behavior of the euro, you can anticipate that gold may goes up to here to follow the euro, right? Goes up to here. By right, if these two things moved in the same way, it will be exactly the same, right? But the gold just lacking some, buying or selling powers. Okay, let's go. All right, and here you can see the gold didn't goes down, and instead it goes up and really retested the same place, and the euro continued to fall, right? 1.236. So it tells you that okay, the euro has already starting the bearish trend, but the gold looks bullish. But can we assume that the gold may be just repeating the same thing that for the euro? What happened to him? Same level, rejection, goes down, goes down. Can we do this assumption? Because we know that from the correlationship between these two things are positive, right? No, you don't need to know which one is wrong. Both the euro and the gold, they are all correct. Okay, nothing goes wrong, either of them. Neither of them goes wrong because the euro goes up, the gold goes up. Euro goes down, gold goes down. It's just the strength. The gold is lacking of the strength, right? Same time factor passed, but the euro pushed up so high, but the gold is lacking of the strength. And that's why the euro is leading. And this guy is lagging. But we know that it cannot be always leading and lagging, right? Sometimes, after some time, the market will correct with so that these two things will be the same phase. Okay. So we have a conclusion. What conclusion we have? The conclusion is, okay, the gold may catch up with euro. Right? Okay, so at here, can we short the gold and use the same strategy you short the gold, you place your stop loss above 1346, a little bit higher, okay? And can you expect the gold to fall? We don't say for very deep, but at least to test the previous low. Do you think it is possible? We don't need the gold to break the new low, but the euro already shows the bearish power. The bear power already breaks new low, but the gold not yet. Okay. Oops. See? It's a simple trade. So this is a very special strategy that I found it in the market because I have observed the gold and the euro a lot of times after a significant fundamental change. But if the euro and the gold are not moving in the same strength or in the same path, okay, someone is lagging and someone is leading, you can use the leading to indicate the future process of the lagging one, which tells you that gold will go up to retest the structure and then gold will go down. And since the euro already goes down, probably the gold will go down again, right? And breaks new low. Okay, have you learned the strategy? Have you understand or master the concept of this comparison? It's important, and it really gives you free money. It's like the market is sending you a voucher or gift. As long as you can observe these two things, you compare them, you compare these two together. Okay, so who short the gold from 1343 today? Raise your hand. Nobody, or some people short with the same strategy that I teach, the structure brick. Okay, good. You have 1, 3, 4, 5 short one. That's very cool, right? And I think you can just keep the short because the euro is continue goes down, right? Okay, Cameron says 1344. Wow, congratulations. So I think the gold will go down again, right? You just hold your short. And once you see the euro start to bounce from some structure, okay, and then you can anticipate, okay, just compare the euro has break the low from non-farm payroll and moves to this distance, right? Okay. So what can it tells you? The gold may go down also and move the same distance, which is here. Okay. Which the gold indicates that it will go below, lower. Okay, just the time not, it's time to prove that. Yeah, the first TP is 1327, the previous low, just like the euro did. And the euro goes down almost 1-to-1, so the gold may go to 1-to-1, okay, or even lower, okay. And also another thing you can give you some hint, same thing is here. You don't need to see ABCD. It's just using the time. The timing is the same. Will give you a lot of implications. Okay, let's check. Since when the gold and the euro starts the latest uptrend? Should be here, right? Am I right to say that? You see, from here the gold, okay, goes down first and then boom, all the way. The euro, okay, leading by 2 candles, but also goes up. All right, okay. And right now, the euro is retesting, almost the same area of here. Okay, so you can expect the euro can go down to here, and the gold can go down to here. Okay, or even lower, which is gold will go to here, but the euro will go to the here. Okay, so the euro will go down to 1.2164, and the gold will go to 1.324 or even lower. Okay, so that is a simple strategy. All right. Okay, if you understand, you can just master, and in the next trade you can participate. Okay, and become a winner. All right. So the gold, we examine in forward chart and daily chart as well. Right now the gold has already, you know, the high is getting lower, the low is getting lower. So the gold is kind of in a bearish channel already. It totally breaks down the uptrend channel. Okay, so gold is bearish. Okay, gold is bearish. Despite this S&P, the stocks market falls so hard, but the gold just, you know, cannot goes up. So this is telling you that the gold is losing buying momentum. Okay, so when you see a thing that is in a downtrend, okay, remember, sell the pullback, sell the pullback. Okay, use the highs to give you an entry point. Okay, and in daily chart, you can see the gold rally so much from 1237 to 1365. Is it possible for the gold to pull back at least 382 or 618? Yes. So the gold is likely to go to 1316 and 1285. Pay attention to here. This part, there's no orders here. People just keep chasing the price. So there are no institutional orders here. So I think this time the gold may just go to touch 1264. Okay, just remember my words. Okay. All right. Okay. Let's go to sterling. All right, sterling follows exactly the same as what I predict. Okay, sterling goes up. This is a perfect trade. That is second time cannot break new high. Okay, it's second try but cannot break new high, and then just boom. Okay, crashed. Okay, and sterling has already formed their big double top. The neckline is 1.4, and you can see here, if you master the structured breakout and pullback trade, you can short from 1.4, and now you earn about 130 pips, right? So the sterling, same thing. Okay, hold your short if you have, and I think the sterling is likely to go back to 1.3657 at least. The sterling may go to here. Okay, so find any opportunity to pull back to short. No, you don't compare dollar yen, because dollar yen has no correlation with euro and with gold. Okay, because the dollar yen, normally the dollar yen will follow the same thing with the gold. Opposite way of the gold. But let's check in the weekly chart. You can see the dollar yen has moved in a different way. Okay, it's hard as dollar yen has already losing the correlation between the gold. Here, this is very correlated. Okay, reverse correlated, negative correlated from 2015 to 216. Okay, gold goes up, dollar yen goes down. All right. Here is also same. Okay, dollar yen goes up very high, gold goes down very low. But then something strange happened. The gold almost goes to the previous high. But look at dollar yen. Did dollar yen goes to previous low? Answer me. by right at 2017 September 4th, when the gold goes to create a new high of the or equal high 1360, the dollar yen should also goes back to the origin of this rally, right? The previous low. But you see here, there's a lot of difference. The dollar yen didn't come down, right? That's why if the gold goes down from here, not necessary for the dollar yen to goes up. The dollar yen may need to feel this difference first, okay? So the dollar yen may still goes down, okay? That's the thing. You can see here, this part also very, very awkward, okay? Dollar yen is sideways, gold, right? Boom, gold goes down so much. See here, the gold goes up so much, but the dollar yen just a little bit. Gold tested the previous high or even higher, but the dollar yen still at 108. Okay, so dollar yen not necessarily to goes up, right? In fact, you should compare the dollar yen with SPX 500. These two things normally moves the same direction, okay? But there are something happen also strange. S&P keeps going up. Dollar yen goes up first, but dollar yen then, you see here, coming down. And then S&P finally, yesterday, comes down. Okay, it tells you, okay, the S&P is wrong. Dollar yen is okay, right? But with S&P goes down, it will drag the dollar yen to goes down as well. Right, that is how I feel. Okay, so dollar yen, I think you can consider not to trade it, or you can trade in a very, very range section. Okay, but for me, I'm thinking that dollar yen may just behave very, very sideways. Okay, from 107 to 111. Okay, and until it breaks either up or down. Okay, dollar yen still sideways. Okay, let's go to Aussie dollar. Okay, Aussie dollar, perfect shorting opportunities at the previous high at this pink bar. Okay, 0.8125, and then you can take the trade with this inside bar. Okay, so this is a strategy that I also teach in my webinar. Okay, a strong bullish bar formed by a small one. Okay, break when the next candle breaks either up or down, you can trade this either way. Okay, it actually breaks down, right? So you should actually short from 0.8076. Okay, and then you enjoy the very, very beautiful reward. Okay, you short this inside bar, it gives you a so nice reward. Okay, almost 230 pips. Okay, and your stop loss is about 50 pips, 1 to 5 risk reward ratio. All right. What's next on SPX? Yeah, other people ask the same thing. My suggestion is today the SPX may have a bounce because this fall, okay, creates a vacuum place from here to here. Nothing inside. Okay, just seller. So when it bounce, okay, there's no seller inside already. The seller are here. The buyers are trapped at 2,800. Okay, if you go to 5-minute charts, what you can see here is, okay, at least we can wait this level to short S&P, which is 2,730. Okay, 2,730 is the most important place because here attracts a lot of buyers, and then buyers was trapped all the way. Okay, so if the price goes to 2730, you can consider to short S&P. Okay, and your stop loss is relatively smaller because we found a structure here. Your stop loss should be above 2760. Okay, but some people ask, can I buy now? My suggestion is if you are doing intraday trade, you can buy, but if you are holding for a longer term, you don't buy. Just focusing on sell only. All right. Unless the S&P pulls back to 2730, but still goes up, didn't reject. Okay, if there's no rejection, you may, abandon the trade. Okay. Any other questions? All right. Let's check Kiwi dollar. Okay, Kiwi dollar, same thing. It forms a very, very nice cipher pattern, tells you to sell at a 0.74. And if you sell the 0.7414, you can earn to 7257. Also a lot of beautiful profit. Okay, so the Kiwi dollar also turns down, breaks the uptrend channel. Okay, structure at here, you can see the price really retest at 0.7322. So it is good to short Kiwi from the structure and all the way aim to the previous low. Okay, let's check the oil. Okay, the oil in the daily chart looks like a triangle. Okay, a triangle, and also the oil has ABCD patterns. Right, this is ABCD pattern. So this ABCD formation tells you, wow, you should really buy from 63.25 together with the previous structure here, right? So your stop loss should be below 36.00, which is 62.95 maybe, and you earn about 100 pips. But right now, you shouldn't buy oil because it's retesting the triangle's bottom, and also it's going to retest the structure. So oil, what I'm thinking is find the pullback to short as well. Okay, let's go to dollar Canadian. Okay, the dollar Canadian has finished a very, very nice bullish back pattern, and the same structure that is here. Okay, this place. Okay, resistance, breaks up, becomes support. Okay, when the dollar can, touch the same supporting area, form the bad pattern, and the price just boom goes up, and it went up so fast from 1.2257 to 1.2557. Okay, that is 300 pips, right? And that's a lot. A lot of money has been changed from Canadian and dollar. But the recent bullish wave tells you that, right, the dollar CAD is likely to have a major uptrend. So the strategy is simple, okay? It's simple. When dollar CAD pulls back to 1.2440 at this place, you consider to buy it, okay? Consider to buy it here or buy it at 1.2400. You can consider multiple entries, okay? Of course, you don't buy right now, okay? Or you can also try a small position to short it, okay? All right. Okay, last, the Bitcoin, okay? The Bitcoin, at January 1st, I published the idea that don't buy Bitcoin at this high, right? At 1975, because it tells you that for the Bitcoin, it goes to all the way to at least $8,076. Okay, and now the price has already go below that. So this is telling you that Bitcoin is bearish trend, and Bitcoin may test this level, which is 5126, right? All right. So Bitcoin are not, there's no good bullish pattern to buy it first. Okay, and I also feel that the price is still too expensive. So what I suggestion is for the Bitcoin, you don't buy until you find some double bottoms and 618. That would be good. Okay. Gold can sell now. Let's see. Of course, gold you don't want to sell now because in 1 hour chart is retesting this structure, right? So the best opportunity to short the gold is when the price goes up. Yeah, here it is. Guys, do you see the long wick of this candle? Can you see that? All right. So if the gold cannot go above 1338, you can still short, but you don't sell at very low place. Don't sell it now. Okay, sell the pullback. All right. Okay. So I think time is up. I think I have covered a lot of the markets. Okay, the gold, the oil, euro, sterling, Aussie, Kiwi, dollar, yen, and also yeah, and also the S&P 500, right? What do? We find the pullback to short, and also the dollar Canadian. We're going to buy. Oh yeah, one thing, dollar Swiss franc. I just published this. You see, in my trading view, okay, today, right, just a couple hours ago, and the price is at the 0.9316. Now it's 0.9385. Congratulations that some of my students have already, captured this trade, right? And now the TP1 just hit. Okay, TP1 just hit. Right. So this is a very nice. A wedge breaks up, pulls back to 618, and you buy. Okay, you can apply the same target setting, right? When we use the Fibonacci level or use the previous high as our target, right? Okay. Euro, it comes to 1 to 2, it would be a bullish guard, isn't it? Okay, Sheriff, I won't say the euro have any bullish guarding patterns because when you see here, I'm thinking you are using this as an X point, and you are thinking that it might be something like this, right? Okay, but you just zoom in the big picture, right? Can you understand that if you really want to draw any higher time frame, okay, in this very strong trend, okay, if you use this as X point, it may tell you that the price may like to go this way. Okay, so that's why I will say that the euro, the bullish guardian, you just observe. You don't want to buy, okay? Because you buy, you're actually not buying at the uptrend. It's already a downtrend. So downtrend is better. Don't to reverse it or count it if the price is not at a very very extremely attractive place. Right? That's my suggestion. Okay. All right. Okay. So yeah, I think this is all for today, and I hope everybody can enjoy the session and you can understand what's the logic of my trading style, what kind of you know. All right, sure, welcome guys. So yeah, I hope that you have learned something. Okay, I will continue to make more webinars in the next coming week or month or year. All right, and I do really wish you a very great success in 201 Ace trading. All right, thank you. Bye bye, guys. Thank you. Trade your plan your trade. Okay, and trade what you see. Trade what you see. That's the most important part. Okay, yeah. So meeting ending now, and thanks for guys for coming. I will upload the video to my YouTube channel. So if you want to see the recordings, you can just go to YouTube. Okay, and you search for ProJack. Okay, you can see so many videos here. You can watch them one by one. All right. Okay, good night. See you. Bye bye.